Hello. So let's start our video. In this video, as per your request, I am going to cover three major topics, which are the key topics when I am entering the trade. By entering, I mean when I am on my broker and I am about to press the buy or sell button, I am looking at these three major things, which are open high low close or open low high close. The open is a true CISD, and along with that we will also learn what a no wick candle means. Okay, so let's start the video without any delays. Yes, this is a representation which I have made it ready for you. Note that the black candle is a bearish candle in my charts and the gray candle is a bullish candle. Alright, so now first of all I will cover the easiest topic, which is a no wick candle. Now we will divert our focus to this candle right here, absolutely to this candle. What is this candle? It's a bearish candle. Alright, it's a bearish candle. It opened exactly here. It opened and it started going lower. It started going lower, gyrating lower and lower and lower without making an upward wick. Now, what are the chances in this scenario is every candle in itself is a power of 3. If this candle has made an open, is now making a low without having a high, there are extremely high chance that this candle will keep gyrating down like this and eventually will come up to become a bullish candle. You can understand what I'm trying to say? It can absolutely come up and become a bullish candle just like this. It keeps gyrating down, and so basically the idea is the wick which is not present above can be made in this candle itself. Now this doesn't mean that you go on applying these in the 1 minute time frames also. Yes, you can, there is no issue, time is fractal. But as you have seen in my previous tweets where I said that the daily candle has no wick in NQ, you saw that on that day NQ came all the way lower to print a bearish candle. So in daily time frame, in 4-hour time frame, 1-hour time frame, these time frames you can use this concept of no wick candle, where you can anticipate that yes, the market is going to come above to make the wick. Now the same scenario for a bullish no wick candle. I will just remove this. Right, this is a bullish candle. The candle opened here and immediately made a high without making a lower wick. Now what are the chances that there is a high chance that this candle will keep on gyrating above, and at some point it will start returning back and it will make a low and it will become a bearish candle like this. Quite clear, I think so. Yes. So this is the concept of a no wick candle. A no wick candle basically means that the candle which is supposed to have an open high low close or an open low high close, which are 4 components, there in a no wick candle one component is missing. This component depends, like in this bullish candle, right, where there was no lower wick, there was an open, there was a high, and there was, if this candle closed like this, then there was a low, but there is a closing. There is no low in this candle. This means that in the open low high close which a candle must have, the low and open are equal. This should not be the case in balanced price action deliveries. So there are very high chances that the candle during its duration will come lower and make the low for the candle. Quite clear? So these are the main topic of a no wick candle. Now let's understand what I mean by true CISD. Alright, so let's get started. Whenever we have a candle like this, right, let's say this candle at this moment is somewhat like this is a bullish candle, and let's say there is no wick here, there is no lower wick, just like I taught you, it is an open high and making the wick of the candle. Now what do I mean by true CISD? If I want to enter here in this candle, what I will wait for is, I will wait for the candle to gyrate back down and cross the opening price. As soon as the candle crosses the opening price, this is the true CISD. By true CISD I mean change in state of delivery. which means that the candle which was trading bullish currently like this with no wick or minimal wick has now came down all the way to the opening price and has crossed the opening price and is now making a bearish candle with a huge wick above. What does this mean? This means that the change in state of delivery, which means the price which was delivering bullishly previously, now it has started to deliver in a bearish manner after crossing of the open. So this is what I mean by opening is true CISD. I enter as soon as the candle crosses the opening price and stays below it, which means it sustains below it. So these things might not be quite cleared in this illustration, but trust me, I have many examples. I will show each one of them to you and I'm sure that they will be clear, that no doubts will be left in this video. Okay, just go up with me. Yes, this is my Twitter examples. All these are my Twitter tweets. I just say one thing to you guys, please don't DM me asking for taking a one-to-one session teaching you everything. Everything is available on my Twitter, on my Telegram videos, on my YouTube videos. If you want to learn and if you are curious enough to learn anything, there is no need of any personal mentor or tutor. It all depends on you. Alright, I have also learned in the same way which I am telling you. I had no mentors. I saw different people tweets, I saw different people's YouTube videos, and that's how I have learned. And I also highly suggest you that learn in that manner only. Relying on one person that he will teach me is not gonna take you anywhere. Okay guys, enough of lecture. So this is the first trade. This is in fact the trade which I took like just now only in the NQ MMXM. You can see what happened here. Now this was a sell program. So why I was looking for sells here is basically that I was anticipating, you can see here, I was anticipating that the prices are gonna go lower and take out these lows. As simple as that. This is the 5-minute chart and I was anticipating it is a market maker sell model, and it did. Now when prices started to going lower, I had this SMT here. You can see this is an SMT. You can verify it. This is the Nasdaq chart. It had an SMT with SPX. Why I did not enter at this SMT? Because you can see this candle was an open high, but it failed to cross the opening price. You can see this candle just closed above the opening price. So in the duration of this candle itself, it was an open high and just closed above the opening price. If this candle itself made the SMT and crossed the opening price and stayed below it for 1 or 2 seconds, I would have entered short with my stop loss just above this SMT high. But it did not happen, and the next candle also had a minimal wick on the upside, so I waited patiently for another candle to candle SMT to happen, and it happened here. Here this candle's high was taken out by this candle in SPX, but in Nasdaq it was not, and it was a sufficient enough wick for me. It was an open and then a low. As soon as we crossed the opening price, I am ready to short. But also I will suggest don't just short as soon as we cross the opening price. Let price sustain below the opening price for 2 to 3 seconds, and to be on a safe side, I would suggest that just wait for the candle closure. When this candle closes like this here, it's an open high low, enter here with your stops above the SMT candle high. As simple as that. If you want to be extremely safe, follow this, don't go deep into it. Enter on the candle closing, stops above the SMT high, and hold the trade. Quite simple. Next example. Okay, so, this is a very zoomed out chart. We will need a detailed view of that. Yes, so we can see what happened here. See, this was the SMT which I traded, right? This SMT happened where this is, I think so, yes, this is SPX, and this was the SMT which I traded. What happened here is, you can see this candle was an open high, and it inside its duration itself, it made a crossing of the opening and made a low. So what I did was I entered on the closing itself, like not on the closing, when it was making a lower body and was sustaining below the opening price. I entered with my stop loss above this high. Clear? Quite simple. Another example. This example will make you quite things clear. So all these were internal moves. I was interested in shorting here when we have a final strong displacement. After the final strong displacement, we had an SMT here. This candle's high was swept in NQ, but here in ES it was not swept. So what happened is, this candle had an open, a high, and when it crosses the opening price, and sustains below the opening price for 2 to 3 seconds, I enter short. That's why you can see I place my entry a bit lower, because in the 2 to 3 seconds which I wait, the candle has gyrated down till here. So I don't enter exactly at the crossing of the opening. I wait for the candle to sustain below it 2 to 3 seconds, and you can just take this. Now you can see if you would have taken trade on closing of this, you would have not got any good RR. So that's why I prefer taking the trade if the candle is sustaining 2 to 3 seconds below the opening price. Then just enter the trade. It's extremely safe. I do it day in day out and share all the trades and trade breakdown with you. Everything is transparent, right? So let's go to the next trade. Similarly, here you can see this candle to candle SMT after market structure shift. We have an open, high and a low. Open, high, low. Where did I enter? When the candle was making, like when the candle made a high and when it was crossing the opening price, I entered when the candle sustained below the opening price for 2 to 3 seconds with my stop loss above the SMT high. As simple as that. There is nothing rocket science in this. Alright. Similarly here, this is a very good example, man. Like see, this was an open, high, and this candle did SMT in another pair, but this was a low bearish SMT, so open, high, low. When the candle crossed the opening price and it was sustaining somewhere here for 2 to 3 seconds, I entered short with my stop loss above this high and hold the trade. Second last example, yes, in this trade I have also showed you True CISD is at the open of the candle, enter on crossing. So I think so it might be clear here. See, this candle is an open, high, low. When this candle is forming in real time, when this candle crosses in real time the opening price and is somewhere trading somewhere here and is sustaining here for 2 to 3 seconds below the opening price, I will enter short, stop loss above this high and target my final target. Similarly here, this example is quite irrelevant, we will leave it. Right. So these were the main examples which I would like to, which I had to share with you. These are very crucial because these will help you in entering the trade. You know what a candle to candle SMT is, that one candle is not taking out previous candle high. This is a candle to candle SMT, but you need a tool to enter it. So there must be an open candle. Yes, it can have a lower wick, right? Just keep in mind, it should not always be that it's an open high candle. It can have a lower wick, but yeah, but make sure the wick is not very deep. Like I mean, what do I mean to say is, if the candles open somewhere here, right? This candle, we want to go short in this candle, and this candle has this huge of a wick here, like so, this huge of a wick, and it is going higher. It makes an SMT, and when it is crossing the opening price, we don't go short in such candles where the lower wick is so heavy. We go short if the lower wick is present and it is minor, like some small wick, this much or smaller wicks. This wick is considerable. When it is crossing the opening price and going below the wick, you can enter short here. But if the lower wick is too long, then don't see open as True CISD in that case. Keep that in mind, guys. Keep that very clearly in mind. I will give you an example what a small wick is. Yes, you can see this lower wick. If this lower wick is present and the candle is making an open high low, you can consider this and trade it. But if there is this huge of a wick, yeah, this wick, this lower wick, don't trade on these candles. This lower wick, which is a very huge wick, don't look for open as True CISD in such candle where the lower wick is very heavy. So quite simple, guys. I think so your doubts regarding this were cleared, and I try my best to keep things transparent to you. You can see these trades. There was no trade taken in the whole daily move. I took this trade, booked a 3.5% risk return, 1% risk was in the trade. I'm up by 3%. What else do I want? So just be patient, wait for your setup to form, and keep a habit of sitting with your hands above each other without pressing any button in front of the charts. That's all I will suggest to you guys. Thank you so much for paying so much attention. This was the main concept, and like I will just revise it very real quick for those who still have a problem. This candle, candle to candle SMT, this candle, candle to candle SMT, open, high, low. When the candle crosses the opening price and starts sustaining below the opening price for 2 to 3 seconds, enter short, or for the best part, wait for the closing of the candle and then enter short here, stop loss above the SMT high. Okay, so the video is getting long enough. I will stop it right here. Thank you guys for paying attention. I hope this video has brought some value to you. If it has does, please like, share and subscribe it to your fellow trader friends so that they can also benefit from this. Thank you guys.